The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 5th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on it at 877-927-6648. Now, if you can't dial in, can't give us a call, but you do have a question, go ahead and send me an email. Now, for that, you send to Steve at TFNN.com. I'm not sure if our server is getting things over as quickly as possible. Today, you can also send it to Steve at MasteringProbability.com. Either way, as soon as we get your message, we will try to get that answered for you. Of course, if you're inside our Tiger's Den, well, every NAD ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, I got all the U.S. indices trading to the downside. Nothing's been broken, though. It's just another day of sideways movement. The Dow is up 386 points. That's 1% to the downside. 1% for the S&P, which is 43 points. 1 3/10 for the NASDAQ 100. 143 points there. The Russell's off 1% or 20 points. Semi's down 24, 1%. Tranny's off 204 points. That's 1.5%. 1.5% for Goldilocks as well. Well, now 1 3/10, down 25 bucks. 2 6/10 for silver, 63 pennies. Light sweet crude is up a buck. Trading out at 73.81. Natural gas is down 39 pennies. 30-year Treasury printed out 127.05. The leaders, dollar-wise, to the upside, it is Novacure up 42 bucks. AMTD Digital is up 19. That's 59% and 192%. I hope each of you have tons of shares in those two stocks. Also moving to the upside, Xi Lab Limited up 15 bucks or 44%. I had 3 of those stocks. If we had any of those, they would be good. Booking Holdings up 11 bucks. Lamb Weston Holdings up $7. That's about 8% move to the upside. GMAC, or Credit Acceptance Corp, is off $29. They're the leader to the downside, dollar-wise, 7.5%. EPAM Systems is off 25. ServiceNow down 23. Constellation Brands is off 17 bucks. That's 7%. HubSpot down 13. That's 4% to the downside. So that's what the markets are doing. Of course, I would love to hear from you. You give us a call at 877-927-6648. So let's go take a look at these markets. What are they doing? Let's flip over and take a look at our equity future charts out here. As we take a look at them, what we basically see is a sideways consolidation with inside of profiles. Granted, the ES Mini is trading below the bottom of its profile, which is at 38.41, but what it really has here, it's got a small consolidation. There's a larger consolidation pattern, but here's a small consolidation. Very easy to identify and write in here. So really nothing is broken, at least as far as Stevie sees, just yet. If we did get a close below 37.8850, then you could get an A to B equals CD to the downside. But the ES Mini, no A to B equals CD to the downside pattern. No swing points have been broken or closed below out here. And that's what it's doing. If we take a look at the NQ, consolidate with inside its daily profile. Price found support at the 10.823 area. That's the bottom of that profile. You got down to 10.814. The Dow Equity Future contract, a fairly narrow trading range band. Price is trading between 32,940, the bottom of its profile, and resistance 33,702. Each have been tested, each have been rejected. Inside the Russell 2000, also testing the bullish structure area of its daily profile, and that would be between the range of 1748 and 1765. So what we have here is a good old-fashioned consolidation with inside the equity future contracts. Not so much with regard to the U.S. dollar index. So let's take a look at it. As we take a look at the U.S. dollar index out here, this is the March contract. What you will see, these arrows are pointing to, are tops of daily profiles. We have not seen price close above the top of a daily profile since the trading session of October 20th. A close above that is going to signal to you and I a change in trend. The U.S. dollar index has a confirmed buy the D point pattern. That buy the D point pattern looks like this. There are a couple different A to B equals CDs, but we start with the A point's going to be the same. That is September the 28th. The B point's going to be down here at October 27th, and retracement into a high just below the top of that profile on November 3rd. You can see we're at the 1 to 1.618. A to B equals CD downside pattern. So you've got to buy the D point that formed out here. The trading day of December 15th. That was a nice big old bullish engulfing and key reversal bar out there. So where's the U.S. dollar index headed to? Right now, the only thing I've got on my tools that we can use is take a look at retracement levels. So let's go from the high down to the low. That was a Gartley buy pattern, by the way. So its price objective may in fact be 107.29. Again, what you want to watch for is not what it's doing at 11.12 or 11.13 or 11.14, but what is it going to do at the close today? Where does this U.S. dollar index close at 4 p.m.? If it is above 104.674, then we have a change in trend inside the U.S. dollar index, and that could give the markets, that could give Goldilocks and silver some troubles out there. But that is what the markets are doing. What else should we go take a look at out here? Well, let's go take a look at those ES mini charts. Let's change our screens. Let's go over to the white background charts out there. This is not what we're going to show you right now. We're going to actually change over to the ES Mini and take a look and see what other signals might be coming from it for its multiple time frames. If we take a look at the 15-minute chart out here, you've got a TD9 count bottom. Now, what price did right after it formed that bar number 9, it got right up to that red oscillator and change line. So it has not proven itself that this bottom is going to have any traction. Price got right up to where there was resistance. It turned back down. Right now, it's testing support. And that support is the bottom of a 15-minute profile, which is at the 38.29 level. Of course, the real key level of support on a 15-minute base is going to be the low of the session, which is that TD9 count bar, which is 38.2350. That's the level that price needs to close below to suggest we have lower price. If we look at the other time frame charts out here, looking for signals, if I look at the 120-minute chart that had a nice TD9 count top out here, this 120-minute chart has been providing really great, useful information. TD9 count top that formed out here at 6 o'clock in the morning, that was on January 3rd. That led to a retracement back to support. We had another TD9 count top that occurred at $1,600 on December 29th. That pulled back and formed a TD9 count bottom pattern. It did on the bar following bar number 9 out there. You can see this TD9 count out here at 12 noon. This was yesterday. That has led to a test of breakout support at 38.3650. We know at the 38.23 level, this is just looking at a 120-minute chart out there, that price also found support as this was tested a couple of different times out there. So your real strong support level for the ES Mini is the 38.23 level. For those of you that pay attention to the 120-minute chart and pay attention to the TD9 counts out there. Steve Rhodes with TFNN. When we get back, we're going to go take a look at stock that is TCMD, and that's for Rachel. Steve Rhodes with TFNN. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So all the U.S. indices still trading lower out there. Dow's down 385, S&P 42, NASDAQ is down 130. Let's go to our first question. This one's coming in from Rachel M. Rachel writes in, says, "Hey, Steve, hope you are well today. I am doing better, thanks. Had an alert on TCMD." And again, TCMD is Tactile Systems Technology, Inc. So Rachel got an alert that triggered today, bought a very small starter position in the stock. Would love your opinion on the stock for upside potential. So absolutely, let's go take a look at what this is doing, at least what the stock charts are communicating to you and I. So in the daily time frame, what you have is if we were to close right here, right now, Rachel, at $12.45, I'd say you have to be very cautious, because what you would get would be a confirmed Rhodes Momentum Indicator top. In fact, you actually have one that is still in place right now. And if you take a look, so there's really 2 topping signals that formed on the trading day of December 23rd. The first one was that Rhodes Momentum Indicator signal. Another one is wave number 7. That's a red letter G that's on my system out there. Price did pull back, but it pulled back into a daily profile. And that pullback really lasted for just one day. Once price closed back above that green oscillator and change line on the December 28th level, it said from a short standpoint, kind of suspect. You're back above that green oscillator and change line. What you really need today is a close above 1248. You need 2 things. A close above 1248, that negates that Rhodes Momentum Indicator top. The second thing that you would need is for the candle that forms today to not be a bearish reversal candle. So those are the 2 things that you would be looking at. So right now, from a momentum standpoint, price above the green oscillator and change line, that tells you have a rising price oscillator above 0. Rachel, those are bullish conditions, period. However, what we're looking for are topping patterns out there. And right now, you could get one depending on today's close and depending on today's candle session and whether or not it's able to take out that high from December 23rd. That's the daily chart. The weekly chart says, well, This is going to complete bar number 9 of a TD9 count pattern tomorrow. It will confirm a TD9 count pattern tomorrow. Next week, it will complete that pattern. Now, the high can come on the bar following bar number 9. Right now, it's on bar number 9, so it's not a guarantee. So again, that says be careful. The monthly chart for TCMD is trading right into resistance, which is the top of its monthly profile. 1242, you're trading at 1246 right now. So at this stage here, the long position is a little bit suspect based on what you're looking at for the daily and the weekly. Now, all patterns can fail, all topping patterns can fail, so this one might. If I look at a 30-minute time frame chart, oh, that says 130-minute. I really wanted the 30-minute chart out there. So let's do this. I'm going to have to change that oscillator and change line. So if you give me a moment, that's showing the oscillator and change line right now for the 130-minute time frame. But we want to show it for just the 30-minute time frame. So let's go take this multi-time frame tool out there, get it to its right time format, and then boom, voila, there we go. So now we take a look at TCMD for the 30-minute time frame. ICA confirms sell the D point pattern. So the A to B was the C to D leg was an expansion of the A to B leg. Nonetheless, you still have a sell the D point pattern and prices inside its current profile. This is the 30-minute chart below its oscillator and change line. What you'll want to watch here, Rachel, is 1235. If price closed below 1235, that's a bullish structured 30-minute profile. That tells you to prepare for price headed lower. And based upon the daily signals, the other daily signals, and the Rhodes Momentum Indicator top, and a TD9 count, I probably wouldn't take a whole lot of heat here. So as long as you don't take heat, then okay. Okie dokie. But otherwise, I'd be very cautious on TCMD. But I do hope that that really works out for you and that my chart reading is just absolutely wrong. Mike M. writes in, says, forgot to say I have a good location for Diamond 328 at about 2:37 p.m. so I can handle a pullback. So this seems like maybe from yesterday. Yeah, this looks like it's from yesterday. So we're having server issues. They're just coming back up. I'm getting emails. Even though it says that this email is from today, it really was from yesterday out there. Hector writes in. Hector wants to take a look at Southern Copper. So let's get Southern Copper up on our charts out here. Oh, and I did have a request inside the Tigers Den from G-Man to take a look at Mobley. So we'll do that one next. Let's get all this data out here for Southern Copper. Let's see if this is today's question. It is. Radio show question, Southern Copper. That's all that's in here. So perfect. Oh, you sent this one to TFNN, and I didn't get that yet. Okay, so we do have a file server issue clearly with regard to getting email. So thanks for sending this one here to the other email address. So Southern Copper, is this a valid A to B equals CD up on a weekly basis? Love the lightning bolt pattern. So yeah, I tell you what we're going to do here. I'm just going to switch over to the black background charts. So if you give me a moment, just because the A to B equals CD tool that I have is much easier to use on that screen, at least at the moment. So you're asking about, well, this is still tactile. Let's get to Southern Copper out here. And it's a weekly time frame chart that you're asking about. So I'm just going to simply expand that out. So we take a look at A to B equals CD patterns to the upside. The one that is present at the moment is one where you start at the low for the week of September 26th, and then the high. And I hate doing this. This is the problem. The actual high that you would have to use is the high from October 24th. And the low that you have to use for the C point is October 24th as well. Now, I doubt that that's what you have drawn in. I can't say for sure. It's hard for me to see on my screen. No, you're showing a different one. Okay. So here's and this was a 0.618 retracement, 61.95. So that one most certainly is valid. So you've got that pattern to consider. You're showing the following. So let's take a look at this now that I can see what you're showing. So you're showing this as the A to B equals C, the same A point, but now for the B point that you want to use the high from December 12th. That December 12th high, by the way, that was a TD9 count top, and that's pretty important. Then what you want to use then for the C point would be the low that forms after that B point. Turns out that was the next day. Now that retracement is only 19%. So Hector and Patty, the way I will communicate that to you is no, that is not a valid A to B equals CD pattern, even if price closes above 63.16. you need to at least get a 0.382 retracement, or at least something close to a 0.382 retracement, not a 19% retracement. That's just a little bit of a hiccup. But that's okay. Don't worry about whether that's an A to B equals CD pattern. Of course, you're using that perhaps for the lightning bolt or the price projection level. In this case here, on a weekly basis, if Southern Copper, in fact, closes above 63.16 tomorrow, not today. Well, is it 63? It is, 63.16. That's the high of the TD9 count pattern. Again, that high came on the bar following bar number 9. That was the candle that formed the week of December the 12th out there. So if you can close above that, that pattern will get negated. You'll be above the top of weekly profile. And then your price target really becomes the trading session from the week of April the 4th. Of course, you can always take a look at some retracement levels out there or profiles on the monthly chart, which we'll do. We'll do that momentarily. But here, that next level would really be 65.22, the 0.618 retracement of that A to B equals CD pattern to the downside that it formed out here. That is Southern Copper. Now, we don't have to take our time. Well, price above the top of the weekly profile out there. So we can't look at that to try to identify the next resistance point. So things look pretty good for Southern Copper. But dang it, and if it can close above the top of that TD9 count tomorrow, Hector and Patty, price should continue to move higher. So I hope that helps you out, and I gave you a good explanation on the A to B equals CD pattern. Steve Rhodes with TFNN. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So you got the Dow trading down 418 points, the S&P 45. The NASDAQ is off 144. Let's go take a look at the charts here for Mobileye. MBLY is a ticker symbol. G-Man inside our Tigers Den is short this instrument out here. So G-Man, you can see we don't have a ton of data out here. So the data for me starts at October 26th. And so not a ton of data. What we do know, though, and this, I think that's when this had the IPO. So when this topped out here, this topped with wave number 7. That is the letter G on my screen out there. Very small portion of the Chapman wave. So you do have that wave number 7 top that is in place out here. Today, price is trading below the bottom of its daily profile. The bottom of that profile is at 3109. So this would suggest that price is going to go target this swing point down here that created that Rhodes momentum indicator bottom pattern. And that swing point is from November 29th. The volume there, 1.6 million shares. So far today, volume is 886. So you've got some pretty good volume. So watch for price to get down into that swing point. What you'd like to see is price close below 28.31 and do with more than 1.6 million shares. That would at least suggest a test of the low, 26.17. As we take a look at the weekly chart out here, not a whole lot that I can provide to you as far as assistance. What I can do, at a minimum though, is provide you a 30-minute time frame chart. So let's go see what's going on from a short-term standpoint. And here, if we're looking for bottoms, well, this topped with a daily wave number 7. You've got a wave number 7 bottom that took place at 10:30 this morning. So ideally, you'd like to see price take that out. All it needs to do is spike below that low. And I'd love to tell you what that low is, but I don't know what the heck's going on with my system here. I see it flashing. So it's got to be the low of the day. So let me put that in here, MBLY, and I'll give it to you that way. That way is the low of the day so far in this instrument is 29.44. So you'd love to see it close below that. It would negate that wave number 7 pattern out there. Even though you got a 15-minute bottom signal, it hasn't taken out any kind of resistance levels out there. So that's what I see when I take a look at MBLY. You're short. Congrats on that. I would stay with that position, at least at the moment. So I do hope that that helps you out, and thanks so much for taking the time to write in. Next question coming in from Electric Light Orchestra inside our Tiger's Den. And the question is to take a look at just simply N-phase energy. ENPH is the ticker symbol. ENPH right now is trading out at 246.46. It happens to be forming bar number 9 today, Electric Light. So this should form a bottom between today and tomorrow. Let's open up the daily time frame chart out here, see if this thing respects the TD9s, and the answer is it does. This formed a TD9 count bottom. That day that it formed was on October 13th. That low was tested, but that low was also rejected. And then price went up and made a TD9 count top. Then it went ahead and retraced out there. So, yeah, I'd say this respects the TD9s, and you've got a TD9 count. So I don't know what you were looking to do with this Electric Light, but if you're looking to go long, well, then you've got that signal to be watching this stock chart to look for some type of change in a short-term time frame chart. So let's go look at a short-term time frame chart, such as a 30. Typically, when you get a bottoms pattern, doesn't matter whether it's the bottom patterns I use or the ones that you use, you'll get some type of confirmation on one of the intraday charts out there. The 30-minute is a pretty darn good one. Well, it turns out that we have a wave number 7 bottom, but we also have a Rhodes momentum indicator signal. So you'd really want to watch the low here, because price is not taking out any resistance, though. And that resistance right now, just on a 30-minute basis, would be a close above 259.26. What I'd really be watching, because price on a 30-minute basis below the red oscillator and change line, is the actual low of the day. And that's down to the 242.98. If end base closes below that, then that says lower price. And what it may be signaling to you is that this is getting ready to form that TD9 count bottom tomorrow versus today. You'd love to see that form above breakout support, which was at 234. There is an A to B equals CD to the downside pattern. So another way, if you're a conservative trader, ELO, what you could do is wait for a bullish reversal candle to confirm a buy the D point pattern. So we see that in place. The being careful here is really supported by the weekly chart, which is trading below profile. You can see wave number 7 top here. You've got a Rhodes momentum indicator top on the monthly. Price may be targeting the 243.30 level. 243.30. See, this kind of creeped off the screen there. We'll get that back on the screen. Is the bottom of its monthly profile. So let's summarize N phase. N phase, ENPH, could or should form a TD9 count bottom sometime between today and tomorrow. We don't see that confirmed signal just yet on a 30-minute time frame chart. Therefore, price may head lower. May get down to that 234 level, and that's the TD9 count breakout area. So EL low inside our Tiger's Den. I do hope that helps you out. Thanks so much for taking the time to write in. Let me just check here, make sure I've gotten everything inside the Tiger's Den. It looks like I have. So that is good. Let me just check the email system out here. And the email system, I've got nothing for either email address. So that's a beautiful thing. So now what do we want to do? And you're welcome. Let's do this. There was a question yesterday. Sorry about chewing down on an ice cube. I didn't really mean to do that. I was just trying to wet the whistle, be in my throat there. And apparently I overwet it. In any event, yesterday there was a question to take a look at longer term what the S&P 500 is communicating to us. So let's go do that project now. What we're going to do is I'm going to change to a different set of screens, a completely different set of screens here. Let me see if I can get rid of that. There we go. So give me a moment here. We're going to change over to a set of screens that's going to show us both the, make sure I've got it right here. I believe I do. Yeah. So we're going to take a look at the top portion of the screen here is the S&P 500, and the bottom portion is the ES Mini. And what we do is I like to look at signals for both of these. Sometimes you might not get a signal on the cash indice because it only trades for 6.5 hours, where you will get that signal on the equity future contract, which is trading for about 23 hours out there. If we take a look at the S&P 500, we just simply take a look at the daily time frame. You'll see that it topped out last year with the bar following bar number 9 of a TD9 count. What price did was it tested the high of last year, I'm talking 2021, and the low of 2021. So you've got a key reversal bar. That confirms Rhodes Momentum Indicator top. Price did not close below last year's low. So still sus, but you do have a confirmed Rhodes Momentum Indicator topping pattern on a yearly basis. Okay. What's the monthly chart show us? Turns out the monthly shows us a TD9 count top. That top formed on the bar following bar number 9 out there, and price took itself all the way back to its breakout level of support. That was at 37.23. We did get 1 month that closed below it, but you know Stevie's rule, you need 2 bars, not a one-hit wonder out there. That second bar said that was a false breakdown. So in the case of the S&P 500 on a monthly basis, we have price below its oscillator and change line. We have actually we don't have a confirmed bottom pattern on the monthly basis for the S&P 500 cash index. We do for the ES Mini. And that bottom is an A to B equals CD pattern. That A to B equals CD, that's the bottom portion of the chart. So what I will do is I'll simply draw in the A to B line. That's very easy to identify, or should be pretty easy to identify out there. And that's this move. And then what we do is we take that, we draw that, move that line over to the B point. That would be right here. You can see this was more than a 1-to-1. The reason why this one completed or confirmed a buy the D point pattern is because you got that bullish piercing candle. The bullish piercing candle, that took place the month of October 2022. Whereas when it comes to October 2022 for the cash indice, it's just an inside bar for the most part. So on a monthly basis, you have a confirmed bottom. On a weekly basis, on the S&P cash and the ES Mini, you have confirmed Rhodes Momentum Indicator bottom patterns. Now, as we can see on both, price right now on a weekly basis is testing that red oscillator and change line. We'll come back to this as soon as we get back from the break.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we're taking a look at the S&P 500. This question that came in yesterday was to take a look at it more from a longer-term perspective than the play-by-play. So we've gone through the yearly, the monthly time frame. We know on the monthly time frame we have it confirmed by the D-point or Gartley buy pattern. The only thing that negates that would be a close below the low of that pattern. That low of the pattern on the ES mini would be at the 35.34 level. Price close below that. That would suggest a move down to 29.13. On a weekly time frame, again, both the weekly cash indice and its equity future contract has a Rhodes Momentum Indicator bottom. Now here is the interesting thing. If we take this chart back, and I'm going to do is I'm just going to, well, I don't have, let me first add more data to it. So let's take this data series. Let's increase it from 3,500 days. Let's go back 25,000 days. How about that? That's a lot of days. So let's let this thing here populate. It'll take just a moment. Okay, there we go. So now it's populated. What I'm going to do is I'm going to take my slider and move it back to the left. What we're really looking for here are not the Rhodes Momentum Indicator topping signals, but the bottom signals. And if we take a look at the last time that we had a Rhodes Momentum Indicator bottom on a weekly basis for the S&P Cash Index, that turned out that it was the week of October 7th. When prices moving lower, doing with less of energy, and what we got was a nice bullish engulfing candle. Well, that certainly formed a nice bottom. So let's keep going back and take a look at these bottom signals out here. Let's again move back. How about the bottom before that one? Well, turns out that was the March 2009 bottom. Nice Rhodes Momentum Indicator bottom that had formed out here, and that certainly we know what has transpired since then. How about in the bear market? Well, that was a bear market out there. There was a Rhodes Momentum Indicator signal that was confirmed on the trading week of November 28th. And what price did was it found resistance initially at its red oscillator and change line. I don't know why it topped where it did. We probably have to take a look at a daily time frame chart for the January top out there. Of course, we know that seasonally speaking, we typically see a top in the early part of January. It takes us lower through about the end of January or early February. So most certainly that's a pattern that was going on here. But these patterns can fail. And we're just showing you one of those patterns. But they do typically, when they do take hold, they will find a significant bottom. Well, let's not stop here because Stevie added 25,000 bars. So if we come back, let's take a look at the next Rhodes Momentum Indicator bottom. Well, turns out that was on October the 11th, the week of October 11th, and that was in 2002. And that most definitely was a significant bottom. Are there any patterns, Rhodes Momentum Indicator bottom patterns, that failed during that move lower? And the answer is no. Each signal that formed out here I've got my cursor. You can see that the first one. There was never a bullish reversal candle to confirm it. Now, what we also had was a TD9 count bottom back in 2002. It was July 26th, the week of July 26th that formed that bottom pattern. So you had two there. So we've only seen a few that have failed when we take a look at the weekly time frame chart for the S&P 500. Let's go back a little bit further out here. Go back a little bit further. Go back a little bit further. See if we can find the next one. Is there a next one? Turns out that there. Well, then the next one that I have for Rhodes Momentum Indicator bottom is formed and completed actually the week of August 13th, 1982. So we've gone back 1982. What is that? 40 years worth of data on a weekly basis. Take a look at Rhodes Momentum Indicator signals. Now, granted, the sample size is small, right, with regard to the numbers. But I don't care whether it's small or it's not. The point is, look how well that has identified bottoms. And I think that's something that each of us need to think about. Because now what we know is on a monthly basis, we have a confirmed Gartley buy pattern for the ES Mini. And on a weekly basis, we have confirmed Rhodes Momentum Indicator bottoms for both the weekly ES Mini and the S&P Cash Index out there. So that is certainly something to think about. Now, if I were to ask you, and I don't know who the you is, it's the people that are in the audience out there. If I were to ask you, I'm going to change the screens out here. If I were to ask you, what are the big concerns with regard to the market moving higher? What would be the answer that you would give? If I were to just look for, if we could come up with maybe, there's probably about a top 5 list out there. And then I'm asking for you, maybe you'll go ahead and send me an email with regard to what you think are the top 5 items that we have to be concerned about with regard to the market moving lower. One could certainly be the U.S. dollar index. You could certainly argue that. But let's go take a look at a couple of different things out here. The first thing, I think we took a look at this yesterday, but this is the S&P 500. This is the S&P 500 cash index out here. And the years that I have identified are the third year of a presidential cycle. I believe we took a look at this yesterday. I'm not completely sure, but I simply want to put that out there because that's what we're in right now, is we are in the third year of a presidential cycle. And in the third year of a presidential cycle, what we can see is that the market, the S&P 500, really continues to move up. We don't really see much of a January pullback out here. We don't, in fact, if you look at the bottom, so each of the years that are highlighted represent the third year of a presidential term over the course of the last 73 years inside the S&P 500. The one thing we know, at least based upon these years and those third-year terms, is that the best performing month has been January. On average, best performing month, January. Next best performing month, April. And look at January, February, March, and April, showing the percentages of the moves higher out there. We are in a bullish time period for sure. The old sell in May cycle kicks in, but just really pulls back ever so slightly. Am I showing seasonality? I think that I am. It's not showing it? Shoot. Let's try this again out here. Let's change the windows. Let me make sure I grab the proper window out there. What did I grab? I can't even see what I grabbed. That's very weird. What's going on with the system here? I just see a white screen. Change windows. Now let me do this here. Let's get rid of this. Weird. It's like it flipped. How did that happen? Okay, so now you guys should be able to see that. Mr. Bill, do you see it now? Hopefully you do. You should see it out there. At least that's what it shows on my screen out here. So again, here's the season. Now I want to go slow for you out here. You can see the boxes that I've checked. I'll check 2023. We're into that right now. And each of the years checked off here are the third year of a presidential term. Now, is this pattern going to kick in? Well, look, we're in this cycle, so we should be aware of it. And we should especially be aware of it because of the bottom pattern that we have on both the monthly and the weekly time frame out here. So this just simply suggests that the market moves higher into that May time period, a slight pullback, continues moving higher into July, a slight pullback into the August time period, and then not much of a Santa Claus rally really occurs after that, but does suggest that the S&P 500 could or should move higher into that July time frame. So that's the presidential seasonal cycle period that we are in at the moment. But somebody might say, well, Stevie, you were asking the question, what are maybe the top 5 things to be concerned with regard to the markets? And that certainly isn't one of them. Nobody was worried about that. But I did want to show that to you so that you understood that. Maybe what you're saying is that the real threat to the stock market out here would be what? Would be a recession? You think that might be it? Recession? That sounds like a logical thing. Now the question is, where did I put my charts out here? Where did I put? So the question is, are we in a recession or not? Right? We've got people that are fighting over whether we are or we aren't, whether we're changing a definition, whether we're adding to a definition. But one thing that we do know is we are in an inflationary period. And we know those numbers get produced for us. And we also know that we can go take a look at GDP. So what we're in right now is we have GDP is falling or is below the rate of inflation. So at a minimum, we have stagflation. Why don't we go take a look at some stagflation years and see what it tells us for the S&P 500. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So, sorry, I was multitasking here. I shouldn't have. So the chart that I've got up on my screen. So what I did last night, excuse me, was I went to the World Bank website. I went to a couple different websites out there and was able to grab inflation data and GDP data. And it was just done by year. So what I did here, then once I had the data, I was able to easily identify those years where inflation outpaced GDP. And those are all the years that are checked on my screen right now. What you'll see below is this for the S&P 500, by the way. you can see what the average price movement is during that time period. Now, if you do the research and you look just for stagflation periods, what people will talk about are the 1970s. Specifically, they should be talking about 1974 through 1984, which is more than what we've got here. So if I just take a look at years where inflation outpaces GDP, how does the S&P 500 behave? And actually, what we might think is a concern, yeah, there's some jostling around. And yeah, in this case here, on average, it doesn't form bottom until the middle of January or something like that. But we already knew that the market typically does that anyways towards the end of January, moves higher in through the May time period and pulls back. But the concern doesn't seem to be too concerning. Now, what if we just simply go ahead and oops, didn't mean to do that. I meant to do this. Oh, I guess I've got it sized up. Let me get this smaller. There we go. That's what it was. And now if we just take a look at just the specific years, 74 to 84, and we just use those as the stagflation years, here's what it looks like. So here you'll see I've got checked off. Check marks to the left of the year are the year that the data is showing for. So now, if we just take a look at 74 to 84 out there, what we don't see is a S&P 500 that is going to tank. So even if we just take a look at the stagflation years of the 1970s out here, we see consolidation slightly moving higher, making higher lows out here. This is the check years with yield inversion, Steve. Yeah, we can do that too. Or Bill, just go ahead and send me an email with those so I don't have to do that work, because I can always go ahead and easily pop up the chart. Folks, stay tuned. We've got some great programming. I hope you enjoyed at least taking a look at the S&P 500 from the longer-term basis. We do have something to think about. Steve Rhodes with TFNN, and I'll see you tomorrow morning at 8 a.m. Take care, folks.